Okay, we're going. Hello, everybody. Welcome to TraderMerlin Show. It is your Wednesday edition. Today we have obviously some interesting news. The show today will be circling around the topic of the 2021 market outlook. Of course, we'll have Sam Evans on here in just a second, but as we look to do a forecast for 2021, things may have changed as about an hour ago. Of course, the House is saying we will impeach for the second time President Trump. The vote passed. Now we'll see next week how it goes past the Senate, which could maybe change everything with regards to Sam's forecast for 2021. But joining me from Stockability, we have Mr. Sam Evans. Sam, how you doing?
I'm great, Merlin. Happy New Year to you, my friend.
Happy New Year. Did you do anything exciting, or are you like me, kind of quarantine lockdown-ish?
Pretty locked down. I mean, look, I'll say this right now. I'm glad I'm not in the UK for a number of reasons. Again, no offense, guys. I'll always be a London. I'll always be British and stuff. But man, with the lockdowns that they've got going on, my family, they can't do anything. I got like an 81-year-old mum there, so I guess it's good in that respect. But man, it's not too bad here in Pennsylvania. For now. It's I'm still getting to do them. Actually, going out for dinner tomorrow night. Can you believe it?
Wow.
But listen. I don't want to get in the subject of it, but I feel safe. But I've traveled. I've been to Disney World since this thing happened. I've been out. I'm smart. I don't, take chances. But, I find sometimes the restaurants are the most sanitized places you can be. The airplanes will sanitize. So, I just hope this thing's, the health thing is what bugs me, And I've got friends who are really suffering right now. I've got family members who are laid up. So just trying to remain positive for this year, my friend. If I'm locked in my house and I'm healthy, that's a good thing. You know what I mean?
Sounds good to me. Well, I like you with a positive attitude. However, when it comes to the markets, you can be positive or negative. We're not, judgmental here. Let's start off with your thoughts on what might be happening for the 2021 year. Of course, I don't think anybody in their right mind could have predicted 2020. But now we have some of the chips kind of planned out, a little bit of a presidential change here.
Yeah.
What's your take on 2021? What should we look out for?
I found Q1 of last year, kind of obvious. The pandemic hit. We didn't know how long it was going to go. Markets sold off, dramatically, in Q1 and stuff. But then it hit those massive monthly areas. And to me, it was just, let's just get bullish again and follow the trend. Mm-hmm. I mean, and then the market's just done its thing. Everything's boomed. And I got to say right now, based on the kind of year it's been, and then when you look at the action of the market, Merlin, I mean, who freaking knows? Is my technical response to it. And I say that, a little bit tongue-in-cheek, but there are some baffling things out there. For me, the thing that's got me a little bit stumped right now, buddy, is the Russell. I mean, the performance of that thing, when you'd actually think it was those mid-caps that would be suffering a little bit more. And when you look across the press, the amount of bankruptcies and things that have happened and companies that have shut down. I'm seeing it in the UK. One of the biggest chain department stores, Debenhams in the UK, I learned just yesterday, is now has closed down. And that's a real household name. Huge. Many of our British listeners will know about that. And I just see the bad news coming. But here's the thing, Merlin. It hasn't stopped the market grinding higher. Now, do I feel there are certain markets out there that are a little bit overbought on this and need some downside? Absolutely. And I think we're seeing some institutional profit taking right now. But I got to say, if with the optimism that's going into this year, with a new presidency, with a new administration, with the fact that the market just dusted off its shoulders and got the hell on with it during the pandemic, and now we have a vaccine, I still can't see anything but a slow grind higher for now. I still say this: we need something really effing big to happen. And when I say really effing big, I mean, if a global pandemic that's killed literally hundreds of thousands of people isn't big, it's going to take something even bigger. What is that going to be? Insolvency? Yes. I have theories on this as well. I'm seeing, interesting things. You take the restaurant sector, the entertainment sector, 75% of restaurants shut down, okay? 80% of gyms shut down. Good friend of mine who works in the native community, huge, representative for Native Americans, big in a lot of his people, presidents in the casino world, literally they are bleeding, casinos shut down and so on. To me, it seems like this is something that's going to be a very secular thing, hitting very specific economies as well, in certain sectors at different times. Again, a slow bleed, but we really need some bad news. And I remain at this stage here. I remain conservatively, cautiously optimistic. I will buy the pullbacks, but I can tell you that when I hit previous highs, I'm not going to just expect the market's going to make new highs. I'm going to be taking considerable profit and then letting those things run if they go a little bit higher. That's my plan, really, until I see some major technical damage, which I have not yet seen. And I'd love your opinion on that too.
It's a good point. I mean, what on earth could bring it down? I saw Jay Homer in the chat puts in nukes. Let's hope not, Homer.
Please
certainly
God.
don't. Nobody wants to see that, but I mean, we're almost there. Like, you're right. You've had things completely shut down. You have, down here, there's still businesses that have not opened up yet. They actually threatened jail time to one of the bar owners down here. It's a bar restaurant. He's been open shoulder to shoulder, no mask requirements, and they finally said, you keep this up, you're going to jail. So, the impact there is obviously business owners who want to step back and say, well, we'll shut down and take this PPP money. But you mentioned the Russell 2000. I mean, this is one that I'm scratching my head because that's historically the canary in the coal mine. And from those March lows, guys, I have it up here. It's 43 weeks from those March lows. You guys can see my chart. 126% the Russell has moved since those lows. That's less than a year, 126%. That's ridiculous. It's unbelievable that something should move that fast. And if you look at how far we fell from when COVID was first announced back in February, when the markets really went haywire, it fell 44% in 4 weeks, and here we are up 126%. It is from that peak in February, it's still up 26%, and that's on the heels of one of the biggest shutdowns in American history. So, it doesn't make any sense to me. Obviously, I think our attitude has got to be, well, the trend is your friend to the bend at the end and buy the dips, but I think you're right. I think it will probably be something systemic. I think it'll probably be something to do with a default in the U.S. dollar, incurring too much debt, and just a faith in the American financial system will be the next piece that brings it down. But, as John O'Donnell will say, right now we're the prettiest girl at the ugly girl dance or something like that. Some horrible saying.
Prettiest girl in the ugly girl contest.
There it is.
I mean, that saying, my gosh. In today's world, you've got to be careful about what you say. But I couldn't have, the diamond in the rough is probably the way I'd put it. But I couldn't agree with that saying more. I look at Russell now. I've got IWM up on my screen, right now, closing at 209.75 cents today. And I'm like, too far, too fast. That's what it reeks to me. Yeah. But again, I see no technical damage. Merlin, what's got me concerned? What's got me really concerned is, I'm worried. I'm not looking forward to this inauguration. I'm really not. Yeah. And I'm a positive guy. I always have been. You've known me a long time. Yep. I try not to get too negative about things. But it's got me concerned in many ways. I'm not looking forward to it. I think that people are, I think fear is the thing. And I think there's a lot of concerned people out there right now, genuinely worried about, where's the job security? What's going on here? It's generally that. And I don't know. I'm wondering now if, this is the thing. It's a social disaster that we're seeing more than a financial disaster. I will say this. I think global economies have got themselves really boxed into a corner right now. We have got, very reliant on a low interest global economy right now. And the repercussions of increasing interest rates, as you and I both know, are devastating. And I think that the powers that be realize that they can't do that. And so where do you put your money? I look at the rallies in the market and I think, well, it's all just hot air, but where else do you put your money, right? Mm-hmm. And I think, and again, I'd love your opinion on this. I just see like the rise in the Robin Hood crowd and the Weebles, and everyone's an expert these days. It is literally just such a different environment to what it was. And retail rally, maybe that's part of all of this as well, which scares me because I think a lot of people are going to get really, really hurt,
Absolutely. Absolutely. Well, you look at, I'll bring it up here. I was going to bring up a couple things because you mentioned it got me all fired up. One of the things that's interesting about right now, and again, Brendan, one of our regulars, is with us. There are obviously sectors that when you look at it from a high level and you say, okay, we have an administration change. Biden most likely, unless barring some catastrophe, will be elected president or inaugurated here soon. We know their stances. When you look out long term, I know you have your strategies you teach at Stockability. From a long term perspective, you look at what Biden stands for and what his platform was addressing during the debates, and he was talking about alternative energy, and he was talking about, well, at least there was some chatter about cannabis legalization. We've seen over the past couple of days, I'll bring up MJ here, guys. I know Brendan is probably damn happy out there right now. MJ has just been taking off. It kind of found its base as those debates were happening back in November, and you can see it right now. It's up to $18. That's an increase of 3.7% today. But off those lows that really started when the debates started getting hot and heavy, it's up significantly. Do you look for that type of stuff when you're forming your analysis and saying, look, I know that these sectors are probably going to perform better because of the political landscape change, or is it still just give me a price chart?
As I think my style has changed over the years. I mean, I can't believe this is like the 18th year I've been involved in the markets now. This 2018.
Oh, you youngster! You
2021. I know. I'm still nipping at your heels, mate. But it's a long while, and I definitely have always had the technical over fundamental, strategy and approach, and it served me well. I am taking a longer term look into things as well. I'm definitely taking, more of that. And I think in the longer term style, it can't help hurt to do that. For example, I got a couple of things I'm looking at right now, where there are fundamentals at play in that. I generally stayed away from, the cannabis plays. I guess, I just one of those boats that sailed without me. I'm always looking for them. I'm interested in them, and I'm saying, but, it's like anything. I think that particularly my approach has always been, while the markets that I trade move enough for me to be able to capitalize and benefit from them, I'm not that worried, and I also believe that, with anything, while there are sectors that are going to rally and they're going to perform, as you and I both know, anybody who's experienced 2008, anybody who's experienced 2000, anyone who's experienced any kind of sell-off, it doesn't matter what it is, it all comes down. Yeah. So I have this general reluctance right now until I see some real correction in the broad market. So yes, I will have market plays out there. I'm getting an interest in crypto, but from a more derivatives perspective. I'll have an interest in those, in the pharmaceuticals. I'll have an interest in the cannabis. I'll have an interest in tech. But overall, for my longer term plays, Merlin, what I need to see is a decent correction in the overall indexes. And I'm not seeing that. What I want, you go back, you have that watch list and you fire that watch list up back in 2008. When those markets hit their lows, that was the time to buy those stocks, So, because it's hard, no matter how good a company is, it's hard to see it really perform if you're in a bear, right? It's going to get dragged down when the fear gauge hits, And
you also don't know, you mentioned 2000, and you mentioned that watch list, and you say go back to 2008. At that point, nobody knew that was the low. I mean, you could have used some demand levels. There were some ideas, but it could have gone much lower. So it still was a gamble at that point. When you look at markets that are down about 50%, you're probably going to be safe if you have that long-term perspective.
You do. And I think that's the thing. If you've got a really good skill and an idea how to, I like buy and hold. I just want to buy and hold it at the best possible price, right? And the thing is now it's buy it, hold it, and then have a target.
Right.
I think, when you get in at the right time, they're those, I'm going to say not generational opportunities, but once every 20, 25 years, maybe you'll get a couple of opportunities in your working lifetime. We are due another one. 2008 was one. 2000 was one. When you're buying at those kind of areas, great. And I think with, again, people make this too damn complicated. At the end of the day, if you're going to buy and hold, just let that thing sell off and let it turn a little bit and then get it. Buying and holding now to me doesn't make sense, right? It just doesn't. And that's fine. I can miss out on real long-term stuff, but it doesn't mean I have to miss out on the short to medium-term stuff, because everything's all fractal in nature. So, again, I would say to anybody, I think once you find your rhythm that works for you, I've always been a kind of investor and trader who's like, I don't really care what it's doing. I know I can always get something out of it. And that's the most important thing, right? As long as you know you can get something out of it, who really cares, right?
Right, yeah. Well, I've got Sam was talking about kind of waiting for that trend to change. And as you see here on the S&P 500, guys, it is not changing whatsoever. It is just basically long and strong. Even though these past few candles seem a little bit choppy, that's in the face of massive civil unrest going on and political uncertainty in the U.S. So, it's shrugging off any bad piece of news.
It's scary, right? Because then you wonder how bad has it got to be,
right?
Because we all know it's not gonna last, right? And I am the last guy to try and be the hero, because everyone, you know this, Merlin, everyone wants to be the hero. Everyone wants to call the top. Everyone wants that. I do not care. For the last 8, 9, 10 years almost, I've just been like, no, you guys call the top. I'm not. But I know it's going to come. History shows that. It has to show that, right?
Yeah.
Profits don't take themselves. And it just scares me. Like, I'm not looking forward to it. You know, like you get these guys around go, yeah, you know, they've traded through these things. Like, I can't wait for a bear market because that's when I do best. And I'm like, yeah, but you know what, dude? There's a lot of nasty crap that happens in a bear market as well that affects a lot of people. And I'm really not looking forward to it in that respect. And I'm not trying to be, you know, the big Samaritan, but it's just a reality of it.
Yeah.
You know, it means things are going to get ugly. And that's just not cool for everybody. But unfortunately, it's the cycle of economics. It happens, right?
Yeah, and you know, I unfortunately am one of those guys who I do every now and then. I don't try to be a hero, but I'll play a big trade. And last year, you know, for the viewers, they know I had a monster trade on the S&P 500, and it did not work in my favor. It took a pretty substantial loss last year, but it's okay. You know, we'll position ourselves and find the next great trade. It's all about having your risk defined. So.
It's a game of inches. It's a long-term game. That's what people have got to remember.
Yep, absolutely. Let's go to. I got a couple, or actually one listener question, but I think it was multiple pieces. This is from Tran. Says stocks like Disney, Zoom, and Netflix benefit from stay-at-home. Can you analyze for me? So let's look at was it Zoom, Disney, and Netflix? I don't know if there's any particular order you want to do those in, but maybe we can break those down for them.
Yeah, and I'm glad if you want, I can share some charts as well here. So just let me know if you can see my screen and all that. So I'll hold on a second. I'm gonna have to just open up some preferences here. First time I've actually used this. Use this on this screen share on here, so just bear with me because I'd really
no worries. I've got my screen up here right now while you get that one ready.
Yeah, so here we go. This should be fine. I can open this up and should be. Unfortunately, we're gonna have to do it off of yours here because it means I'm gonna have to quit Skype. So, and I don't want to do that.
No, you don't want to do that. Okay, so no worries. I'll drive. Which one do you want to start with? Zoom?
We've done this before. So, it's all good. All right, excellent. So look, on Zoom here, I got a monthly and I got a weekly and I got a daily chart up on here as well. I think let's just talk about the technical side of things right now.
We're in Zoom? Zoom first?
Yeah, ZM. Let's take a look at that first. You know, the first thing that strikes me, and again, I'm looking at everything I'm looking at here, Merlin. I'm going to just be looking at, you know, monthly, daily, and weekly, or monthly, weekly, daily, whatever order you want to do it in. For me, I think the big thing that's striking me about Zoom right now is, I mean, you look at that weekly chart, and that is in a very steady downward trend.
Yep.
I don't care what anyone says. You know, you topped out of 588.84 and you have made a consistent lower low, lower high, lower lows, lower high, lower lows. And again, I see this week alone, we've had that little pop and we're pushing. And all I see is at key levels on this weekly chart, 400 I see resistance, see 475 I see resistance, 500 I see resistance, you know. And, you know, to me, I'm sorry, you know, it's simple as it is. You look at our monthly chart and we have made a significant close lower on that last month's chart as well. And I see nothing, and I'm going to go out and say this, I see nothing but wide open space on this thing until we get into about 250. Yeah. And I got no reason to see otherwise. And people were like, look at me, why the hell? Like, what's wrong with you? This is Zoom. All right, well, let's talk about the fundamentals of here. You know, this was the Robin Hood trade. Everybody jumped on it. They're like, well, everyone's going to need to start using Zoom. We're in this new world working from home. Absolutely granted, and no surprise, what did the market do? Rallied. But let's ask ourselves a question. You know, is Zoom the only video conferencing software out there? Is it the only communication tool, or is it a fad? I love Zoom. We use it in Stockability. I use it a lot in my life. But I'll say, again, too far, too fast. The smart money has been systematically taking profits. You want to see that? Look at the weekly chart. Look at the trend on the daily chart. Because, you know, Merlin, yeah, I can argue it's in an uptrend on a monthly chart. But you know what? I want to look at the recent price action. And let's just say, like, there's a little tip for anyone looking at this right now. What I'll always do is I'll do the 2 out of 3 kind of syndrome in here. If I take a look at a monthly, I will argue that's still in an uptrend. Still made higher highs, higher lows. Weekly is making consistent lower lows and lower highs. Daily is also making consistent lower lows and lower highs. 2 out of 3 of the big boys, they're the big boys. Monthly, weekly, and daily. 2 out of 3, that's a downward trend for me right now. And I think there's a nice gap to get filled around 320. And like I said, my eyeball is on 250. I've been putting it out there. I've been buying some, you know, out the money puts on this thing just to see what happens with it. And technically, that's what it's telling me. From a fundamental perspective, I think they've got some catch up to do. I think they're kind of overpriced in the market. I think they bolstered their things, and I think some of their service is poor. What frustrates me about Zoom, they got some great integration, but come on, Zoom, get with it. You don't offer HD streaming. Hell, I can do HD streaming from free software. Do me a favor. There's stuff that they need to do to raise their game. And watch this space. I see other streaming technologies coming in and taking that monopoly away, and I can see this becoming a very competitive marketplace. So Zoom, I love you. I think your ease of use is fantastic. You're definitely the Apple of video conferencing. I love it. But you need to get your features up, and instead of wasting your time putting like video filters on there, give me 1080p and 4K streaming. That's what I want from you, Zoom.
Oh, wow. I'm man, tell you, get him on a soapbox over there. The guy just gets crazy. Now, it's funny because we were talking about this back in November. I think it might have been late November, early December. And my attitude was exactly yours. Look, to me, it's the right here, right now play. It was the perfect place at the perfect time to capitalize on a pandemic. And you look at, this is the small kid. I mean, this is like me walking up to Ryan. I'm Zoom. Right, I'm Zoom, and I'm walking up to Ryan Watkins, which is, your Microsoft, your Google, your Apple. You mentioned they're the Apple of it. Apple's going to jump into space and wipe them off their platform. I mean, there's no way. So, and by the way, Ryan Watkins is he's lost a lot of weight, but he's what, 6'6" or something. He's a big boy. I wouldn't stand a chance in a one-on-one fight there unless I got one good shot at the kneecap. Watch your knees, Ryan. But yeah, I agree with Sam. The trend right now, this thing is just screaming of short opportunities. Until something proves us wrong, short that downward trend line. I mean, I simply just put a trend line across the highs of this most recent sell-off from October through where we are today. And you notice, today might have been a great short opportunity just because it came that downward trend line. I like what Sam's saying, right around 410, but I think that this, unless they really take their capital and they've made a boatload of money, they should be bringing on some of the biggest developers, biggest tech guys, and dominate this space. But, man, it's hard to compete with Google, Amazon, Microsoft, and Apple, trillion-dollar market cap companies that can just wipe these guys off the face of the planet with one check. So, I don't know.
And they do it, and they've done a great job. I mean, I really like it. I love their integration. And like I say, when I made the comparison to Apple, I'm an Apple guy right now. I'm working off an Apple machine right now as we speak, I love what Apple do, and I love their ease of use, and I find that with Zoom from day one. They got through those security issues they had, and everybody kind of like video bombing, but there's certain things that we need, and we live in a world now, Merlin, where people, you're doing shows, I'm doing shows, and I want my life to be easy, but I want the technology out there, and there's definitely they're lagging a little bit, and so they should start reinvesting that cash, building up some solid partnerships and looking how they can raise their game further. For me, they need a real partnership with somebody before somebody stamples all over them. So that's Zoom for me. I'm bearish right now on that.
What I feel like I should almost do like a Siskel and Ebert type show where we can do our two. I'm giving it a big thumbs down. I know you're giving it a thumbs down too. So short him if you got him. All right. So what's next? You got Zoom on that one. What do you want to go to next?
Did you mention also Disney was on there?
Yeah, old Disney. Yeah.
I mean,
which surprisingly, out of the three of these,
House of Mouse, baby. I mean, oh my gosh. I mean, look again. Oh, it screams of too far, too fast. But I think when you really look at Disney, and let's get fundamental before we get technical on this. I gotta say, when I look at the price of some of these stocks out there again, and I look at the revenue streams, and I know they're suffering as well. But the House of Mouse, they bounced back before, they'll bounce back again. I look at this as a market, I look at this at 120 and I say, it's reasonable if it comes down. Again, this needs a pullback. This thing needs to come back, okay? But ever since, they made their acquisition of the Fox IP, it's had its ups, it's had its downs. But I tell you, they know what they're doing. And for me, this is the entertainment play. They've managed to keep Disney World open. I know we've got to get Disneyland back out and firing and stuff, and they're bleeding. But oh my God, Disney Plus, how smart! I mean, they've got such an incredible product there that literally appeals to everybody in the family. Their new content is fantastic, and I loved it. I mean, I'll say, look at my office, man. I mean, I'm a nerd. You can see this on here. Mandalorian, the things they're doing on there.
Love
let's
it.
Let's forget about, The Force Awakens and all that debacle. Star Wars ended at Return of the Jedi and continued with Mandalorian. I don't know what those other films are, okay? You're talking as, heck, those new ones made the prequels look good. God bless. I mean, now I'm crying for George Lucas to come back, all right?
Right.
But the point is, they've started to turn it around. And this is the thing, they always bounce back. I'm very excited by the slew of entertainment they've got coming out. I mean, look at what we've got. We've got WandaVision coming out on Friday this week, the next show. They've got a slew of new shows coming across, and now they're actually embracing. They're using these IP. They're releasing new Alien material as well. They're getting out there in that space. And again, I don't think you can stop the house of mouse. And when they do get those parks back open fully, at the capacity they can, I tell you, I went there to Disney. I went there, wonderful experience. I've seen it, but forget about that. Just the entertainment alone. I think Disney Plus is the future. And what we're seeing, and this is why I also want to talk about Netflix, Merlin. What we're also seeing here, and I was skeptical a couple of years ago, but the kind of money that Netflix and Disney and Apple as well. But I gotta say, Apple love some of their original content. I think it's the future of entertainment. And instead of movies, we're getting these long, beautiful series. And you look at shows, and they are Hollywood quality shows, Merlin.
Some of them. The
chunks. I mean, it's fantastic. And they're paving the way, wouldn't you agree? So from a complete nerd fanboy point of view, but also someone who's got a kid of 3 and the content that's on there, I don't know, man. I think they're just moving in the right direction. Like everything, it needs a pullback. But, man, I got to be bullish on this. And if this thing gets down to about 130, 120, I'm going to be buying as many calls as I can with a stop loss.
Wow, nice. Well, I'm sure it's not just 3-year-olds. I'm sure our viewer Brendan up there, as he's curled up with a little Jack Herrera, might watch a little Finding Nemo or some of the Pixar movies again.
I just think they're doing it right.
They are. No, they're doing a great job.
And don't get me wrong, I'm a guy who loves going to the cinema. I love cinema. I love the movie theater and stuff. But, man, lately we've been watching this original content at home and streaming. We watched the new Bill and Ted when it came out. And then we watched Wonder Woman 84, which was, fantastic to watch Gal Gadot, right, and everything. The movie was, it wasn't like the first one. It was good. But still, we are watching, movies in the comfort of our own homes. And I thought I'd never like it. But, I'm not hearing that guy chomping away on popcorn behind me.
On their cell phone with this bright light in my face.
Got the blue glare of the cell phone. The people kicking my chair. I gotta say, I kind of like it, Merlin. I do.
So let me ask you a question on this chart here. Let me bring up the chart for the viewers. I agree with Sam. Right now, I can't disagree. I feel very confident what Disney is doing.
It's a long-term play as well.
Yes.
Long-term, I'm bullish on.
It's surprising to see it do so well, knowing that most of the parks are shut down. I know that some are open, but they're very minimal capacity. But again, it doesn't matter what my opinion is or Sam's opinion is. The price chart is saying it's moving up, and I think you want to join that trend. The problem I see here, what scares me most about it, and I'll draw 2 little boxes on your screen here for the viewers to check out. Sam, I'm just drawing boxes in between these gaps that happened recently. There are monster gaps on Disney.
There really are.
And, these may be magnets to price, which could pull price back, which if you look at that, you're looking at, potential buy point right around, let's say 155. You've also got this area down as it closed that gap around 126, 127. These are points where it might be great to join that trend at those levels, but I think it's just the angle, the trajectory of this right now is a little scary to me. It's not quite Bitcoin trajectory, but it's close.
Yeah, it feels very exploratory, doesn't it? I mean, it does. And you can't appreciate exactly what you're saying, Merlin. You can't really appreciate on those monthly charts. Not even so much just on the weekly, but you get down to that daily chart. And I said around the 130. There's an area between about 120, call it about 120 and 110 if I want to be really conservative, So again, my kind of middle of the night is around the 130. That's where I'd start sniffing around, and taking some interest in this at the moment, because I got to say, if we could break down and start trading, I feel below 170, then I'll ride that to the downside for maybe, I don't know, $40 or so. I'm not against that. Short term, this thing needs a correction. But long term play, this is on my list, Merlin. I just want to get it at a good price. I really do. No,
good. I like it. All right, we had one more on our list, which was from Turan, which is Netflix. Yeah. Netflix, boy, I tell you what, this is probably the worst looking chart of the bunch. Well, if you're not an options trader.
Yeah, right. I mean, as an options trader, kind of nice, really, isn't it? I like what I'm seeing, with Netflix at the moment. I mean, I think, this range has been played. I just think it's still a little too pricey. I think we're seeing here a decent bit of profit taking, distribution maybe in the market at the moment across this time. But again, it's holding well. There's a need for products like this right now. I turned away from Netflix, right, for a little bit. I was like, yeah, but you keep that subscription. It's got that, that they're just, well, I'll keep it going and
it's only $13,
Right, you do. And I thought, what, but I didn't cancel it. I just didn't really do it. And then I took some time to look back and I'm like, you know what? They're investing again. Their production slate, what they're putting in, it's awesome. And those movie tickets, those sales to those movie tickets are going to go somewhere. They have to go somewhere. People need entertainment during this. And, I always look at the worst case scenario. What if this time next year we're still where we are today, Merlin? And
please, no, I don't want to hear that. Come on, man.
Please, God, we don't. But what if? And even if we're not, is everything just going to get back to normal? Let's say 60% of the world is inoculated in 2 months. It doesn't mean suddenly everything's back to normal.
Right.
Things are going to change. And I think, again, with streaming services, entertainment, they need this. Like Disney, though, I want to see a pullback on here, Merlin. Looking at that monthly chart, 400 is the number for me where I'd be I'd be maybe reinvesting. Again, I want to make it clear, though, I'm cheap as chips, all right? I don't want to be buying the stock up at that point. This is where I do longer term options plays. I want to, with the capital being what it is and the price of the overall market, the ROI is just not there owning the stock to me. That's where I'm going to go. And one of the strategies we teach is like deep in the money, longer term leaps. That's a better use of my capital. I like it around the $400 mark. That's what I'm thinking on Netflix. But this thing definitely needs to come down. I have to say, it does need to come down.
Yeah, I'm looking at. I have never been a fan of Netflix. I even own it. I mean, not own the stock, but I'm a Netflix subscriber. At a certain point in this quarantine, especially if we're the same place we are next year, I've already watched everything on Netflix, man. There's nothing left for me to watch. They better come out with some new content quick.
Thank God for Cobra Kai, though, man. I
haven't watched it yet. Everyone keeps telling me I got to check it out.
Do yourself a favor and go work. Great work that they've done on there. I mean, really great. I mean, let's not forget that started with YouTube originally, but yeah, great production values, really good stuff. If you're looking for easy entertainment, I love it. 30-minute shows as well.
Yeah. I'll check that one out. On that picture there of Netflix, guys, for me, you're right in the middle of a range. And you notice I put this yellow box around this range, which goes from 464 all the way up to 574. So you get a $110 range, which seems colossal, but it's really not. And if you're in the middle of that range, this is where you start writing spread trades. You do some
condors all day long.
Yeah, right. And just as long as it stays sideways, which it has for the better part of 8-9 months, then collect that premium and just let it stay sideways. Nothing impresses me technically or from a business perspective about Netflix. I'm more excited about the Disney one. I'm very bearish on Zoom. So, we've got one sideways, one thumbs up, and one thumbs down for me.
Yeah, I agree with you. If I was a long-term holder of Netflix right now, I'd be saying, hey, I'm going to learn how to do some condors and write some non-directional plays and collect on that, because you ain't really doing anything. You'll be getting your dividend depending on what price you bought it. There's stuff you can do on it. I like the volatility of it as a play, and I do intraday options work and, swing trades on options as well. There's some great opportunity on that. But long-term, it needs to come down for sure. Absolutely.
Alex asked, why does Netflix buy AMC or Apple buy AMC? Really cheap for them right now. Well, look at the price chart. Here's AMC. I'll bring it up on a weekly. Bottom line is, who wants to get in that space right now? Even if we do get out of COVID and everyone gets the vaccine, there's still going to be a good percentage of the population that goes, I sure as hell don't want to sit next to people in a crowded movie theater. No. So I don't see that happening.
Bring back the drive-in, man. Bring back the drive-in. I mean, that's what I'm feeling. And maybe going to the movies becomes a true event again. I love the idea of it, and it's something that could be there. I don't know, man. I mean, you look at that at $2.18 AMC, but I don't know, man. I'd rather put my money into something else. I really do right now. I hate it, but it's a shame. But, things change and it's all cycles, right, Merlin? And I don't want to go to the movie theater.
Alex says 5 years from now, and you're right. And again, here's the decision you have to make as a trader versus an investor. You could look at something like AMC right now at $2 and say, damn, that's not a bad deal. They'll probably get PPP money until they get past this COVID thing, and maybe down the road it does move back to the upside. But you have to ask yourself, do I want to tie up X amount of capital? Let's say it's $10,000. I want to tie up $10,000 and hope that in 5 years it turns into something, or do I want to deploy that $10,000 in something that I'm pretty sure is got a good strong trend, it's moving? These are kind of that home run hit type of trades that I think your longevity as a trader goes down significantly the more of these types of home runs you're trying to make, where you're buying these penny stocks and hoping it rallies up.
And that's pretty much all it is a penny stock now. Again, this is where, you want the case of, you use money in a situation like this that you can afford to lose. And I always hate that term, but that's kind of how you have to be. The point is like you say, you use the $10,000 as a number. I mean, it's great. You got to ask yourself, okay, what if it sits around the $2, $3, $4 mark for the next couple of years? Fine, you haven't really lost, you haven't really made, but could you have been putting that money elsewhere using some leverage safely in other asset classes? The answer is yes. I just think there's a better place for your money. And, again, you've got a plenty of upside on here until this market shows its hand. And right now it's not really showing us anything, I don't think.
Yeah.
So.
And this is the same thing for a lot of these different sectors. You have to look at a market sector like cruise lines, right? Cruise lines were very popular, and it's going to take a while for them to win back the confidence of people to go in masses on cruise ships. Airplanes, I understand. We talked about this back in February. I understand airplanes coming back long term because we'll always have a need to travel, but I may put off my need to ride on a cruise ship until this is a thing of the past and it's no longer an issue. So
it's like I look at that like the oil play, the airlines. I mean, back in April of last year, that thing was negative. I mean, they were giving oil away, and people were like, oh, and I'm like, well, that's something where you got to ask yourself, well, why would I not buy it? The demand for oil ain't going away anytime soon. And now look at it, knocking on the door of $55 less than a year later, Again, that's why I encourage anybody. You got to look, we're talking stocks here, Merlin, but there's other things out there, commodities, currencies, bonds. You've got to expand that knowledge and look at other things as well, right? There's more than just stocks out there.
Absolutely. I want to make sure we get some time here. Feel free, you guys, if you have questions, to type them into chat. I'm trying to keep up with you guys. And Brendan, I will definitely watch Kengan Asura. I'm not a big anime fan, but you know what? I got to watch something, so I'll maybe check that out.
You've got some hardcore things going on. You've got to do something with your time, right?
Yeah, so. I'm going nuts. I was so bored of this. I thought, okay, I'll try to write a book, but who never goes. All right, let's see. Jerry, I think once Biden becomes president, the COVID will disappear and we'll start opening businesses. Who knows? I mean, hey, you know what? Honestly, I hope so. I just want this to all go away and get back to life as normal. I don't think so, but we will see. Tell me a little about what you got going on. I know that you've been doing a bunch of different education pieces. You were doing some webinars. I actually saw a show that you did on Facebook the other day, which had some great content about SPACs. That was awesome.
And you were on the show. It was awesome.
I didn't mean to step on anybody's toes. I just had to say hi.
Oh, it was great. So, yeah, I have to show. So, I'm CEO and co-founder of my company, Stockability. So, this year, I've been really moved. Well, actually, it happened about Q4 of last year. I moved over more into the CEO role to work on the company, developing it. Got a wonderful team now, a number of instructors. There's like 4 instructors, another 2 coming on board as well shortly as well. So the team's growing, the student base is growing. It's given me the opportunity to step back. And I'm teaching. I was teaching this morning. We were short in oil this morning. So it worked out pretty nice for us, So I'm still in there. I'm still teaching and doing that. But I'm also getting an opportunity to work on the company and getting it out there. So it's been great. And been giving me an opportunity to get my own show together, which has always been one of my goals.
Yeah.
So every Thursday at 12 noon Eastern, we have it on Facebook Live. I broadcast on Facebook Live. It's called Take Stock Live, the show, brought to you by Stockability, and I host it. Sometimes Dan Bustamante, my partner and co-founder, comes on the show. My other partner, Ryan Watkins, comes on. Ryan's actually talked about that oak of a man. He's going to be joining me tomorrow on the show. We have it on there. We're live as well, so people can kind of chip in and ask questions and so on. We're getting there. We're not quite at your viewership yet, but you know what? We're getting there. It takes time and it's fun, Pretty excited though. One of my shows just before we do a couple of cool features. Your call, my put. I was calling that Zoom short 2 weeks ago, so hopefully people were listening on that. We give a few tips out on there and do it, but. Yeah, we've been getting up to 2,500 views afterwards on our YouTube page. So it's getting there. It's gaining some traction. But it's a whole lot of fun, And I know I've asked you to come and be a guest on my show. So I know you're planning on doing that, which was really cool. But it was great to see you on the show last week.
Yeah, it was fun. Well, it's funny because we just did a special. I guess but I just did a show talking about SPACs because we had a lot of people asking about it. And it's kind of fascinating, how the model of bringing a company public has changed, you know, and you
Yes.
have a company that basically is just this blank check company that can, you're basically buying it, hoping that they pick the right company to buy. That's just crazy to me, but.
Yeah, and I say we talk about all those kind of subjects. You know, we'll talk about SPACs one week. You know, we'll talk about cryptos another week. We tried to keep it going. We do a lot of live analysis in there as well, which is good. Tomorrow, Ryan and I are talking about our top 5 performance enhancers for your trading and investing. So we've got our list together. We're going through on that. You know, we get into the psychology of it too, and we do a cool little feature, your call, my put, and then my partner Dan, like, you know, he's very anti-crypto, so we do his Buster Bitcoin feature whenever he comes on, where he gets negative about crypto and I get a bit more positive about it to be devil's advocate.
Oh, bring me on! Let me come on that show, would you?
You're going to be my crypto man. I've got you. I'm going to get you in the next couple of weeks on that, and that's been good. And then Dan and Ryan are going to be a lot more active on our YouTube channel as well. So Dan's going to be doing some live trading on there, and Ryan mini lessons we're putting out there. So look out for that. And then I'm going to be starting a take stock open house session probably once every couple of weeks. So I'm going to do live analysis, nothing else. Let people come in, ask questions, looking at the market in real time, and just giving my trade setup. So I'm looking for as well. So we've got a lot of cool things happening on those shows as well. So it's going to be fun. It'll be fun. We got that tomorrow, our next show.
Sweet. I've got the page up there for you guys. You want to check it out? It's stockability.com. There's all kinds of information there. You can see all the little tabs. Click it, explore it, and check them out. He's got some nice videos there as well.
We do.
One last question before we wrap up here. Juan Manuel Martinez, thank you for the question. He says, what's your opinion on all the clean energy stocks and the sudden rise on prices? Is this a bubble, or do you think that they will keep going up?
Clean energy stocks, you know.
You know what? How about before you? I'll let you mull it over. But let me bring up on the screen over here a few of the major ones or people to look at. Some are fun. Some are going to be individual companies. But one really popular one is ICLN. I'll bring that one up for you guys. And I'm going to bring this up just so you can get an idea of Mr. Martinez's question here. Are they in a bubble? Are they overbought? Well, if you look at ICLN, which is this is an ETF, by the way. This is not one company. This is a basket. And since those lows in March of this year, it's gone from a low of right around $8 to a high of, let's see, about 34, 35. I'll even draw the percentage change on here for you guys.
34.25, yeah. 34.25 looks like the highs on that, yeah.
So if this was a bubble gum, it wouldn't be double mint. This would be bubblicious. 321% in 41 weeks. You know, that's a pretty monstrous move for an entire sector. Let's look at TAN. That's another one. That's a solar power ETF. That one's gone from about $22 up to over $120. How about PBW? Oh, yes, the old PBW. This is another clean energy fund. Talking 25 to 126. How about Duke Energy, DUK? Right? No, Duke Energy isn't quite alternative. It looks like crap right now. NEE, these are others that are exploring getting into that phase. Next Era Energy. Anyway, you guys can see here, huge moves up in this. For me personally, I believe a lot of this is coming on the heels of people anticipating a change in the political landscape here, because the Republicans and President Trump during his initial 2016 campaign was saying, I'm bringing back coal. I'm bringing back clean coal, which, by the way, is the definition of oxymoron. Clean and coal? I mean, come on. That's like an honest politician. They don't exist. Anyway, but Republicans were definitely for coal. Democrats were leaning more so at alternative energy. Now, if Biden and Harris are in there, I think it definitely will act as a catalyst for it. The question is, do you think it's already priced in and overdone? I mean, those are some ridiculous moves in a short period of time.
Yeah, I look up charts like that and I'm like, yeah, you know what? If you weren't in it, you weren't in it. End of story. You know the old saying, buy the rumor, sell the news. It's all just come about it. You know, early in the campaign, Biden had his clean energy policies. You know, right now, it's like anything. You know, there's anticipation of what that means, of what it's going. Yeah, at the same time, oil's been rallying as well. You know, the whole energy sector has been rallying. So what does that tell me? You know, people bought oil while it was cheap. Okay, and they're still holding on to it. But they've been getting into this when it was literally pennies on the dollar, buying the rumor, you know, on the anticipation of the policy. And then you know what happened? Once it's confirmed, the profit taking will come. The fact that oil went up at the same time, that's the hedge there, you know, that's the hedge. They were both cheap at the time. This is what's happened in the market's moved. The fact that oil was really kind of like say moved in tandem with it tells me that's a lot of rumor buying and in anticipation of it. So yeah, I mean, not excited, especially at the prices I see, you know. And again, I say to anybody, I mean, let's be honest, if this is sustainable, it will sustain itself. The problem that a lot of people do is they look at a chart and go, oh, I've missed out. Accept it. It's when you chase it. And any good trend, if it's a real trend, will pull back and give you that next opportunity to join it if it's a true trend. So, yeah, I'll keep an eye on that. But again, until I really see some policies coming out there, this is just hot air and rumors. Again, I'll go back to what I know. Anyone can get lucky on a move like that. I'm not about getting lucky. I'm about being systematic and knowing that, I don't need those kind of moves. And that's how I've always built my own portfolio.
Yeah, I think with the alternative energy stuff right now, I think long term you're going to see it go up significantly. However, I think what you're getting now is people FOMO. It's the FOMO, fear of missing out on it, has driven up so much. So wait for that pullback, wait for it to come back down to some realistic valuations. And if you miss it, you miss it. So what? But what generally will happen is that point where you feel like you got to buy into it, and when it's rallied so much, you buy it, and it seems like the second you hit the button to buy and the shares show up in your account, it just does nothing but fall from there. It's like the Murphy's Law of financial markets. So exactly. I would wait for it to come down a little bit. I think it's a bubble type of market. I think the cannabis on the other side has a lot more room to move. That's been a sector that's been beaten down. So I think you've got a lot of upside out there for the cannabis market.
Go look at Bitcoin. I mean, you had the first bubble, it burst, and then look what happened. You got a second bite at the cherry. If this is real, if it's sustainable, you'll get another bite at the cherry.
Yep.
Simple.
Parting question here. Nathaniel says, does Sam trade with his live community during market hours?
Yes, I do. Yes. Yeah, we have three, all of our sessions except for one are, so we have currently 6 1-hour sessions a week. One is held, actually it's still open in the live market because it's the Forex market, but Monday, Wednesday and Friday we're there at 9 a.m. till about 10:15 Eastern, and next week we're actually having sessions on Tuesday and Thursday, so 5 days a week we're there at the US Open, and then we also have a number of sessions that are also in the last hour of the market as well. So yes, we do, and all of our instructors do that, which is pretty cool. So nice. I was actually doing a session this morning with that, and I actually forgot to mention as well, like if you go onto our website, man, if you can show the guys as well, on the homepage, scroll right down to the bottom, we actually got 2 webinars coming up. Call it the crisis proof business, okay, which is going to be a real deep dive into, how we're hedging and preparing for this year, how we're using the asset classes, a little bit of our proprietary stuff that we teach as well, hearing from myself, Dan and Ryan Watkins. We've got one on Tuesday, 21st of January at 7 Eastern, and one on Tuesday, 26th of January at 12 p.m. Eastern. So anybody can go on the website, scroll down to the bottom, free registration for that. It's going to be a couple of hours as well, so you'll be able to find out more about it by going over there too.
All right, love it. So much content today, man. I love it.
Oh, it's fun. Look, it's never, it's never a quiet moment, is it? There's never any dead space when we're doing a show, is there?
So, no, there isn't. I like it. It's good stuff.
I'm excited to see if when you come on my show, then you're going to do, more. I'm going to be able to sit back.
Oh, and then I have to bring the energy. All right, well, you got the energy drink there. Maybe I'll bring a Red Bull or a Monster when I come on the show and talk even faster. I'll be like that Micro Machines guy. Remember him from like 20 years ago?
Well, I also promise on the show next time I'll make sure my Skype enables me to share my charts. I've got them all open, ready to go, and off it went. But so sorry about that, but we worked it out.
No worries. We, you know what? Nobody even knows the difference. It's okay. It was seamless.
Exactly.
All right, buddy. Well, thank you so much. Thanks for the outlook, the analysis. Hopefully your 2021 is a rip-roaring success, not just your trading, but also for your company out there as well. So thanks for coming on.
I hope to see you on the show tomorrow, as well as typing in your comments as well.
All right. Sounds good, buddy. Take care.
Thanks, everybody. Cheers.
Guys, that was Sam Evans of StockAbility.com. He's got a ton of great information out there and a bunch of great instructors. So, one of the things that you all have the choice to do is look for different places to get information about the markets. I think Sam and his team do a great job, otherwise I wouldn't have him on the program. As you guys know, there's only one group of individuals I will not allow on this show ever. Okay, let me go into economic calendars. Why don't we do that? I think I had your economic calendar up here. I'm going to do this, and of course, if there's any last-minute questions, I will dive into those as well. But we'll start things off with your economic calendar for tomorrow. Today's economic calendar, the CPI numbers came pretty much in line with expectations. There wasn't anything that was overly noteworthy with regards to data today. This is what we've got cooking for tomorrow. You see out in the U.S., you've got natural gas storage, you have unemployment claims as well, which will be of interest, but really it's about the British pound. British pound has a lot of announcements. That's construction output, goods trade balance, index of services, industrial production, manufacturing production. That's a lot of great stuff if you're trading the British pound, which of course has been on a pretty wicked run recently. The only other one here that I look at that jumps off will be at 9:30. That's going to be 9:30 Pacific time, so that's actually 3 hours into the market. Jerome Powell will be speaking. Who knows what he's talking about, but he has a tendency to move these markets, so be very careful if you are right around 9:30 Pacific time tomorrow. Now, earnings season is just about to kick off. It's this one. This is the calm before the storm, if you will. We have Afria, which I know some of you guys are big fans of Afria. But this is all before market opens tomorrow. You have Afria, you have Delta Airlines, see how that one transpires, and then BlackRock. BlackRock, many people calling them the new Goldman Sachs of the 2021, as they were replacing Goldman for a lot of prominent positions in the cabinet. We'll see how their earnings reports come out, but that leads us into earnings season, which basically means Friday you have a ton of financial firms. We'll talk about that one later on. All right, what else do I got here? What do I have against Dwight? I love Dwight Traderman. Dwight Traderman's great. He's hilarious. I don't know about his trading abilities, but no, that's not the individual I was speaking of, Mr. Hall. And the one I was speaking of was another individual with the same first name as my guest that was just on the program. Sam. Yes. Building out your peer intelligence network. Okay, all right, cool. Tomorrow. Okay, so we've had a really interesting run of guests this week. Obviously, Monday was a show where I did myself because I wanted to talk about some of the pressing issues. We had Corey Lane yesterday, did a great show on options, and really, I think, did a fantastic job of walking through from how you're selecting the trades, how you determine the strategy, and then moving on to actual execution and implementation. We had, obviously, Sam Evans today of Stockability and giving us some great content analysis, and you can just see his dynamic personality. Tomorrow, we've got a guy who spent probably 45 years, an actual real floor trader on the Chicago Mercantile Exchange. Mr. Bob Dunn will be joining us. Of course, he probably forgot already, so I will have to reach out to him in a little bit just to remind him that he's going to be on the show today. But Bob Dunn will be our guest. I never know where the show is going to go with Bob. Usually what happens with Bob is I just go, Bob, how you doing? And I can just put him on camera and he'll talk for an hour, and it's always entertaining stuff. So if there's something you guys want us to talk about with Mr. Dunn tomorrow, let us know. Send it on in at TraderMerlin.com, or you can always email me directly. My name is on the screen right now. It's TraderMerlin@gmail.com. That's a great way to just get in touch with me there. Of course, the way you can help the show is by clicking that like button or also putting your comments down below the video on the YouTube channel. Jonathan says, Merlin, do you recommend the book Market Wizards by Jack D. Schwager? Yeah, absolutely. 100%. That's a great book. It's a great book. There's actually New Market Wizards and Market Wizards. I think that they're both great books. Just profiling successful people. A lot of names you may have never heard of before and seeing what they do. One of the things that stands out for me in reading those books is discipline, discipline, discipline. It's all discipline and money management. Sometimes it doesn't even feel like they have a great strategy. You know, they're throwing darts, but they have a risk management plan around throwing darts, and you'll win in the long run as long as you have good discipline and money management. So, yeah, I think it's a great book. You can probably find it on Amazon. You can also find the used books. And, of course, if you do, you could go to Google and type in marketwizards.pdf. It may be out there for free, depending on where you look. All right, that's going to do it for me for today. Again, tomorrow I've got Mr. Bob Dunn on the program. Hope you guys have a fantastic trading day tomorrow. And we will probably see more and more volatility in these markets. Embrace it. It's going to be a fun year, 2021. We'll see you guys tomorrow with Bob Dunn. Take care.